Okay, today I will cover IFRS 15 revenue. Okay, for today's class, before this I've covered you deposit, and the first part of my video is covered deposit and sales and repurchase agreement. Okay, for today we will cover on consignment good. So how we want to do the consignment accounting arrangement here. So we can say we have a consignment arrangement. So I will explain this later. Second one is about principal versus agent. So you want to know the accounting treatment in the principal book and the agent book as well. So I will start with my consignment first. What is consignment, class? What is a consignment arrangement here? Okay, I give an example to you. Alright, so now I give you a scenario first. Okay, so what is consignment? So this is an owner. This owner we call as a consignor. Okay, this we consider as consignor. So now you are trying to sell. Actually, you are trying to sell. I give an example. You are doing a business. You are trying to sell a loaf of gardenia bread. Maybe to any supermarket. I give an example, maybe Giant or other supermarket. Maybe we can call this as an agent as well, but we don't call agent here. For this consignment arrangement, possible we can call it as a consignee. Okay, so just to recall you, who is this person, class? You must know when you are doing your accounting. When you do your accounting, you must know who you are first, which book that you are recording. So for this video, I'm more focusing how to record revenue for owner, for consignor. Alright, so this consignee is as an agent only. It's part of help us to sell. Alright, consignment occurred when goods are sent. Okay, goods are sent, alright, to a consignee who undertake to sell the good. Okay, this consignee help to sell the good, alright, and continues okay, to whom? To customer, class. Potential customer. So the question here now, just to ask you, in context of the accounting purpose of owner itself. So while the consignee are trying to sell the goods to your this particular consignee, what this owner have to record? Okay, so now we are in consignor book. So this consignee are trying to sell, Giant are trying to sell the goods. While consignor continues, you have to remember, the consignor still own the goods. Okay, consignor still own the goods, so will appear as what? Good, class. Inventory. It's still under inventory, your inventory, while waiting for this Giant sell your goods. I don't want you mention when you pass this good to your consignee with the Giant, you assume that this inventory are not being owned anymore. No, consignor still continue own the goods. Okay, so for this accounting, initially, this physical, that means that when the consignor send goods to the consignee, there is no need to create any accounting entry to relate to the physical movement of this good. When the consignor send goods to the consignee, So no need to create any accounting entry on the movement of these physical goods. Alright? So maybe in the view of consignment, you just mentioned that the change in location where the keeping system, the inventory keeping system are being kept by the consignee only. That is just for a monitoring purpose. But in terms of accounting, you still maintain the inventory value in your books. Alright? So now, however, this situation, if consignee is a giant, not yet sell. Okay, still waiting for the customer. My second scenario, sales of goods by consignee, which is a giant. So what is the accounting treatment here, class? So now come to say that when the consignee has sold the goods, he will pay the consignor a pre-arranged sales amount. Alright? The consignor, which is I think better I name the Mr. owner, easy for you to remember the name. So I assume the owner is Mr. Alvin. Okay, I use name because we want to have an application here. Alright, so automatically when consignee sell the goods, alright, the consignor will record the amount with a debit cash. Alright, the consignor will record this previous amount with debit cash and credit to sales. So now come the journal entries for under consignor books. So once the consignee has sold and passed the money to consignor, so you will debit cash and credit revenue. Now you can start to recognize your revenue. To show that, class, actually, when you will start to recognize your revenue, class, as I told you just now, you only start to recognize your revenue once your consignor have sold the goods to your customer. So don't assume that once this your product at the consignee, so you want to start to recognize it, you can't. Alright? Your inventory is still owned by you. So in this case, once have sold the goods, once have sold the goods, then you can recognize the revenue. Not only that, because the inventory had been passed to the third party. The inventory has been sold to the third party. So what you will do, your closing inventory will reduce. If your closing inventory, I repeat, closing inventory will reduce because of what? Because you have sold the stocks. When closing inventory has reduced, your COGS will increase. Okay? To recall your knowledge, COGS equals to opening inventory plus purchase minus closing inventory. So that's why when closing inventory reduce, your COGS will increase. So what you will do, debit COGS, credit inventory as well. So this is general entries. So first entries and second entries as well. So we are talking about the chapter revenue. So please, when you have to do your essay part, you can explain this both journal entries. But more focus to mention the issue here, the revenue can only be recognized when the consignee, the giant, sell the goods to your customer. Clear? Okay, class. My next situation here. Automatically, I believe you have to pay a commission, depending upon the arrangement with the consignee. Alright? The consignor must pay a commission. Possible, you have to pay the commission to the giant because help you to sell. Alright? So what I want to say here is, when you pay commission to consignee, Mr. Alvin, the owner, please apply to the case. Alright? So automatically, yes, correct. Debit expenses because you paid a commission paid. Commission paid, you must debit expenses. The consignor must pay a commission to the consignee to making the sales. If so, this is a debit to commission expense. Commission expense and credit what class? If you didn't pay yet to your giant, good. You have to record it as an account payables. So this is a different transaction now. Alright. So when goods are being sold, so you can recognize your revenue, you must debit your COGS, credit your inventory. If you pay commission, I'm worried that you cannot see this. You see, you pay commission to your consignee, so automatically you must debit expense and credit account payable as well. Okay, so this is under consignor books. Okay, so pay commission because that is your promise. You mean Giant earn the income. Giant earn income from this commission. Okay, so pay commission to consignee as investment credit account payable. So this is under consignor books. How about consignee class? How about consignee? Under consignee books. Correct. If you receive the commission, you just debit cash. Alright. Receive commission. Okay. Debit cash. For consignee, you can recognize the revenue. It's the same. Because maybe the revenue is based on commission only for this consignee. So the revenue, not the amount of the total amount of the selling price. The revenue is the amount of the good, the commission itself. The commission, the amount commission received. Because that is a part of a revenue of that company, of the giant. Because giant will not produce day up. Yeah, I don't say this. Maybe giant also have their own products. We also see like mineral water of giant. That is different. But I'm not talking about Mr. Alvin products that put in the put at the shelf of the giant. So giant have to sell them. So the revenue that they earn is come from commission. So for consignee, you can recognize the revenue, but the amount is limit to the commission received only. So this is the arrangement of consignment arrangement. Clear, class? For consignor books and consignee books. Now, principal versus agent. Another story. Under principal versus agent. Okay. Under this principal versus agent, you must remember, class. Okay. So you must know first who you are when you read the case. Why? Because if you are a principal, so you have to answer as a principal book, or you have to answer as a agent book. Don't answer both, class. You must read who you are. So I don't want, because we don't want to waste your time to answer both books. If the question tell you a principal, so you must answer based on the principal book. Okay? Alright, class. This principal and versus agent. Before I proceed to the accounting treatment, just to tell you, in the question, they will not tell you who is the principal, who is the agent. You must read yourself, and you must know from your judgment, from the characteristic being given. So do you think that who you are? Alright? When you want to know who you are, you must know the criteria. Criteria of what? Class. Criteria of principal. If you make this criteria, that means you are the principal. Question will not tell you you are principal or agent. You must read yourself through your judgment. You must know either this is principal or this is an agent. I believe you have learned in your contract act, in your business law as well, which is, I believe you know who is principal, who is an agent. Okay. So now, to be more specific, okay, who is the person? This criteria, who is the person of the responsible to fulfill promise? Second, who hold inventory risk? Third, you have an S description in establishing price. Means that if you fulfill the promise, you are responsible to fulfill the promise. You have an inventory risk. You have a description, means that you have the right to decide the price as well. So class, when you meet these three criteria, fulfill promise, you bear the risk, at the same time you establish the price, so you consider a principal here. Alright, so I will give you one sample of question later to decide who you are, principal or an agent. You have to argue with the director. Sometimes the director maybe mistakenly make a decision. He think that he's an agent, but actually he's a principal. So you can argue with this justification, with this criteria as well. So what is the accounting treatment for principal and agent book? So I just draw again. I think the same story. Principal, this is an agent. You are trying to approach agent. Okay, help me to sell TV. This is your product. Okay, so now the price is $100 per unit, and you promise to pay $10 commission if the agent can able to sell. Alright, so now agent have to sell what class? Good. Agent have to help to sell to the customer. Okay, I give an example now. So the scenario here, under the scenario class, you must know, okay, agent able to sell 10 units of TV. When agent able to sell 10 units of TV to the customer, alright, so agent able to collect how much class now? They give you cash 100 times 10 units. So you will get total 1,000. So agent has to pass the money to the principal. So now you must know which book that you have recorded. Okay, now we decided we do the principal book first. This is an agent book. In the exam, you choose only one. If you are principal, you talk about principal. If you are an agent, you talk about agent only. Don't give this comparison. This is for study only. Alright, for your revision only. Okay, class, principal book. You got 10, right? So what is a debit and credit here, class? Good. Once the agent has passed the money, you still have to record. Okay, I give an example for agent first. Sorry, I give an agent first. So now, debit, credit. So for this principal books, okay, under the principal books, as you see here now, you promise to give what? $10 commission for per unit. So how much that you have to, principal have to pay to the agent? You only, so we can say the commission will be 10 times 10 units, because one unit can get $10, so $100. So how much that the principal will earn? 900. Agent only pass to the principal 900. Okay, because 100 they can collect as a commission for him. So what I can say here, class, credit revenue. Why you can credit revenue? Correct. Once you have agent have sell the goods to the customer. Once agent has sell to the customer, you can credit revenue. But if just now, based on the transaction, principal only collect 900 from 1,000 because you only can collect 900 from 1,000 because the 100 you have paid to agent. Agent take the 100. However, class, remember, although principal has paid the commission to the agent, the revenue still have to record full. That we call as gross revenue, not net, which is total still 1,000. Okay, still 1,000 debit cash, but at the same time, because you have paid 100 to your agent as a commission, right? So you have to pay to your agent, so that we call as what? Good. The same concept as just now, commission expenses. You see? So this is the journal entries that you need to know. The keyword here, the principle I want to say here, you principal book, you still have to record gross revenue, the full amount. Alright? And the commission that you pay 100, you still recognize it as a commission expense. Okay, clear? So if you net it, net cash, credit revenue, commission expense, so I can say summary, because you have paid, the agent has paid your money, so I can say here is debit cash 900 because you only get 900. You credit your revenue, how much, class? Good, 1,000, and debit commission expenses 100. You see, still I know you are quite worried with all this balancing, so still balance, class, because you only receive cash 900, but the revenue still recognized full, and the commission expense debited because you have paid to agent the $100. Clear? So this is a summary of journal entries. This is like consider one by one. Alright, so but I just give a summary at the end. This is the only journal entries that you can write in your exam later. So how about agent book, class? Can you recognize full 1,000? Good. As the previous on consignment, you only record the still revenue, but the amount is only what, class? Good. The amount of the commission received, because that is your revenue. Debit what, class? Class. You got 100 right just now? Sorry. Debit, debit cash. So why debit cash 1,000? Okay. Why, sorry. Debit cash 1,000 because you receive from the customer just now 1,000. Credit revenue 100, and you have to credit as what? Good. Account payable if you didn't pay to your principal yet. Another 900 because you have to pay to your principal. However, once you have paid to your principal, so what you will do, class? Debit account payables. Why? Because you have paid, discharge your obligation, you have paid to the principal the amount, and credit cash 900 because you have to pay to this particular principal. So initially you receive a cash, you receive a cash from customer because you sell the goods, you hold the money first, but you only can recognize the revenue 100 because 10 units. So the another 900 you must recognize an account payable because you're an obligation to pay the money to the principal books. Okay, if at the same year they have paid the money pass the money to the principal, so you can discharge your account payable and you credit cash, because the money you must pass to the principal. I think you can understand the basic of the principal and agent. So I want to give one question that I want you to argue with me. Who is principal? Who is an agent now? I want you all to write back the question later. Okay, write back the question, then you can continue to play this video, the way how to answer. Now we continue to answer this question. Nash has entered into a contract with a customer, you see, to supply specialized equipment. So this is your product. And Nash entered into the contract. Nash has developed. Nash, who are you now? Okay, your name is Nash. Okay. Equipment in the conjunction with the customer. Develop the equipment, but as contracted supplier to assist on manufacture. Help to manufacture the equipment. The supplier deliver the equipment directly to the customer. Once manufactured, delivered to the customer, Nash pay the supplier directly and invoice to the customer and agreed with the selling price cost 25%, cost plus. Any equipment defect are the responsibility of Nash. So now we analyze the statement first before we proceed to another story. Class, just to inform you, this question comes from, just to write here, this question actually comes from BBP. This question comes from BBP. From BPP. Okay. Mock exam question. September exam. So this comes from BBP. The reference of this question is under question 2, ethical. So for today, I will not cover the ethical perspective. I only cover the accounting part only, under principal versus agent. Okay, the ethical part later I will cover you in the future, in the next video possible. Alright, so now back to the question. Who Nash? Okay, now my question, who Nash? Before you decide is a principal of agent, come back to our criteria. Where is the criteria? Remember this criteria? Who responsible to fulfill the promise? Who bear the inventory risk? Who established the price? So come, you answer the question. So one I can see here now, Nash itself enter into the contract with the customer. One. And next, Nash invoice, you see, invoice to the customer. Invoice customer, and he himself have established selling price here. Class, just to inform you, if you want to prove someone is a principal or agent, all these reasons actually got marked. So you have to list out, you have to apply to the case. You can mention that Nash have entered to the contract itself to the customer. Nash also have established the selling price to the customer with the cost of 25%. So you apply to the case, alright? I don't want knowledge only. So next, you see, any equipment defect are responsibility of Nash. It shows that what class? It means that before you transfer to your customer or anything, or after you transfer as well, if any equipment defect, either at the supplier factory, possible at the supplier location, because the supplier have to manufacture and the supplier help the principal to deliver the equipment directly to the customer. Supplier deliver the equipment directly to the customer. Okay, so equipment defect risk. Who is the risk now? Good, to nudge as well. The responsible. You see, equipment defect are responsibility of nudge. So we can see anything happen when the supplier hold while waiting to transfer to the customer. Alright, any equipment defect are still a responsibility of nudge. Okay, so now from all this we realize what, class? Correct. So therefore nudge is principal. Just to ask you, so who is the supplier now? Supplier will be what now? Supplier is a agent. Why agent? I don't want to teach you the full sentence yet. This just to give a knowledge first. How to know principal, how to know agent. I want you to do later, if you don't mind. I really hope you can try to do an essay from this point that I give to you. Then I will comment your essay later. Okay, supplier is an agent. It's an agent. So why you say an agent? Because principal have instructed supplier to manufacture. Means that you give an instruction. Agent help the principal to manufacture. Only help to manufacture, not enter into the contract with the customer. You do contract with nudge only. Okay? Means supplier, principal instructed supplier to manufacture only. Contract with the principal. Next, not only that, principal also required what? Supplier need to deliver the equipment to customer. So I think from your judgment you can see already, class, the supplier just act as an agent, help to manufacture and help to deliver the equipment. So it shows that nudge is a principle, and you must give reason, class, please. When you say it is a principle, you must give reason one by one to your answer. Each of the reason, please, one paragraph. Contract with the customer, why? Contract with the customer to supply a specialized equipment. Give a long sentence. And not only that, in addition to that, another line. Alright? Give one space, then you put another reason. Another reason. The nudge itself have invoice to the customer, and it itself an established price. What is the price? Mention, applied to the case, 25%. Cost plus. You see? Cost plus. Okay? Next, the equipment defect, responsibility of nudge. So, when you list all this, okay, one point, then you give space, another one point, you give space. So, you will see the flow of your essay, then you come to the decision to say nudge is a principle and supplier is suitable as an agent because he just entered the contract with nudge just for manufacture and delivered the equipment to the customer. You see, you must give reason. But just to share to you, as you can see here, continue. The finance director has said that nudge hardly ever act as an agent. What you understand with this? Hardly ever act as an agent means that nudge believes that hardly ever act as an agent. It means what, class? Okay. I don't want to answer. I want you to try. What do you understand with nudge? So, do you think nudge perception is right or wrong? Nudge hardly ever acts an agent. So therefore, you see, therefore on that basis, he instructed an accountant to record full amount of revenue. in Nash account. So I want you to see, to confirm with me, either Nash is an agent or principal. Actually, based on this question, I want you to do the essay later, but actually this part is for ethical issues. Okay? This part is for ethical issues. Finance director has said Nash hardly ever as an agent. Mean that Nash believe that I'm not as an agent. Hardly ever act as an agent. Means that to show that Nash believe that he is not an agent. He is a principal. So do you agree with this finance director? After you have answered all this, class, after you have answered all this, okay, you have proved it's a principal, so you can say what Nash said is correct. Nash is a principal, it's not an agent. Because he said hardly ever act as an agent here. Okay, and class, most of the students always left the answer like this. Remember, for all questions, when you are argue about a criteria here, once you know what is it, is a principle, don't stop there. You must mention as well. So, first you mention who you are, the setup. You are talking you are a principal here. Why? So, you mention the 3 reasons just now, or 4, up to you, alright? Based on your essay later. Please don't forget to apply to the case. Once you know it's a principle, you must talk about the accounting treatment of Nash. Can I know what is my accounting treatment of Nash? Very good. So, company need to recognize gross revenue. Because in the principal book, recognize gross revenue when? Now, when to start to recognize? You mentioned only recognize, back to the principle. Remember the first principle of IFRS 15, only recognize revenue once supplier deliver the goods, the equipment. Don't say good, because you want to apply to the customer. So at least you show me the flow. All this must left space, alright? One reason, second reason, third reason, fourth reason, and you continue and so on. Then don't forget to close with accounting treatment. Mention that into your answer, the way you write. So today I've covered consignment arrangement and principal versus agent with the question. So I really hope you write back the question and try to essay it, my explanation just now. And we have done with consignment, we also have done to know who you are, is it principal, is it an agent, and how is the accounting treatment. Same goes for this. You must know who you are, either you are consignor or consignee. Okay, class? That's all for today. So this is about these 2 areas. Alright.